What's going on, traders? Welcome to the channel. My name's John. That's Groot. We trade options here. Pretty big start coming off the weekend, but not too bad. I will take it for a Monday. Closed out covered calls in Mara, 57% profit, $308 in income. And I got lucky because as I sold, Bitcoin and Mara started climbing higher. So that would have tested my position. And then opened up a new trade in Target, TGT, and I will discuss that a little further, as well as what I'm expecting throughout the week. So let's just dive right in and I'll show you the screen. Just as a heads up, I was also looking around at gold, like GLD and GDX, for a position. Nothing really filled for me, but those were looking pretty solid in terms of premium. I just didn't want to chase that there. But Target did open up for me, and there's a few reasons why I like this trade. So let me just walk you through it here. Number one, I'm in Target. Here's the option chain for it. And basically when you're working with companies that kind of don't have a lot of activity, they're not as fluid, there's not a lot of liquidity, you generally are probably not touching the weekly options. You're usually looking at monthlies here. So typically speaking, I'm going to be looking at this 25 days out. June 18th, that's the next closest monthly options expiration. And then for July, that's further out. That's 53 days away. Now, the main reason why I really picked this trade is two things. I like the retail trade. I think it has been kind of sitting for a little bit, and now it's starting to pick up again. In terms of reopening, just these companies are reporting their profits and their forecasts, and that's great, whatever. But what I like here more so is the premium, the amount of options income I can potentially collect from a trade. This is almost 25 days versus the 53. I'm basically collecting almost as much as I would have on a 50 to 53 day trade for some other tickers. And so I like Target. I like the premium. That's why I picked this. And I was at the 31 delta when this had opened up for me. So I'm looking at about a 69% probability of profit in this trade, as well as the fact that my max loss is capped. So I'm risk defined in this trade. Puts are on the right, calls are on the left. I'd sold the 220 strike, and then I bought the 215 put, and that's kind of this put credit spread build out here. So just to show you kind of how that curve would look, let me get rid of that really quick. And let me go to Target. And here would be kind of the way this trade is set up. So I'm looking at a max profit at $112, and it's not crazy, but it's part of the whole portfolio. You never want to look at just one trade and treat it as isolated. You want to look at your trade in the context of how does it affect your whole portfolio. What are you looking at if the market makes a move in a certain way, and how are you staged for that already? So that's kind of what you want to look at when you set up a trade. So max gain potential 112, max loss if we are trading below 215 is going to be 388 there. So looking at a nice risk defined play in this trade. And then to cover some of the other options here that are set up, my income trades in AMC are looking great. I did try to close this one here at the 12 put strike, but no luck, so I will probably try throughout the week. And then where we're at with Tesla, it is actually above my strikes now, so I do anticipate within sometime this week, if we stay above 600, I will start turning into the positive territory and collecting that theta decay, as well as we'll see how Tesla's looking. There's plenty of days left on contract here at 25 left, so we'll let those ride out. Target just opened, but same expiration dates there, so 25 days out. Palantir is recovering. MVT is also recovering, which is nice because I'm still looking at MVT to be above $28 a share at expiration, and it looks like we're getting within that realm. So I do like this trade setup as well. And then OIH is one of my other plays that is a hedge with oil. That's an oil ETF. So looking pretty good. Let's look at the charts here, and I'll just kind of walk you through things that I'm seeing, what maybe we can expect through the week, and then where to go from there. So, so right now we are in Trading View. Looking at the SPY, this is just the general S&P 500 overall. A few things to note is we're still sitting with choppy action. We're kind of near the top of the range here, almost near new fresh all-time highs, but the volume has lightened up. So always bear that in mind. You know, in terms of the day, yes, it was a green positive day. There's a lot of room to fall. We could go lower for sure. And then with the lower volume today, it just kind of adds some lack of conviction for participants in the market. It's like, hey, we're near the top. Hey, we're not feeling great or confident. We need something as a catalyst to push us higher. So that's what we're really looking for this week at on the whole as a set of market participants. Now QQQ, this is the Nasdaq. You're looking at something quite similar. Nasdaq's been a little shaky in a while. We're seeing a lot of rotation from tech to like value, and that is healthy overall for the market. But where this is going to take us in the future is same idea. We're starting to get near the top of this range. Volume is for sure light, especially today. So then the ultimate question is, well, we need something to add follow through or conviction in either a bullish or bearish sentiment. So just look at that. VIX, I tout this all the time just for anyone as a tool. And the VIX is a volatility indicator that we are dropping. We are below what used to be a really key support resistance line, and whenever we get lower, you do tend to see some chances that we spike higher. So keep that in mind. As this spikes higher, the market drops, and usually positions that are more like bullish in nature will be tested a little bit. So you do want to keep your risk in check, keep your position sizing quite small, and just look out for things like that.